Ajit, hi, morning. Yeah, just analyzing your numbers, and earlier you gave a volume growth guidance of 15 to 20% for pipes and fittings. Considering that volume has seen a decline for both these segments, does this guidance then stand intact? How does FY25 look in terms of volumes?
See, the guidance were based on basic fundamentals. You are going to see a few blips along the way. For example, the volumes in Agri segment have been fairly lukewarm since the end of Q2 and has not really picked up to the extent that we had seen last year. But the fundamentals remain strong. And the forecast for FY25 remains the same. I don't think it is going to be based on Q3 performance. But at the same time, if you actually see the EBITDA margins have improved almost 30.5% for the organization. And the main revenue drop has been due to the resin volume dropping almost 32%.
If you could help in terms of the prices and the spreads for PVC, VCM, etc. for the third quarter, any inventory losses that you're seeing?
No inventory losses. And the PVC EDC spread, typically we expect to be higher than 550, is currently at a 410 level. Okay. And the PVC VCM spread, for which about $250 spread is what we would like, is currently at 150 level. So that is basically driven by the PVC prices, which are at probably the lowermost that it will go to. It's around 750 dollars per metric ton. So this we expect PVC prices have bottomed out, and for both EDC and VCM there is a lag which exists between PVC prices and EDC VCM prices.
Right. Also wanted to talk about your margins because they were in the range of about 11 to 12% last few quarters. When can the margins go back to those earlier levels of 20%?
Couple of years back, because of the unusual movement in PVC prices, there were paranormal profits which we experienced, but that is probably once in 10 years. That is not expected to repeat. So the high profits which you had seen in, say, FY 2021 is something because of PVC prices reaching $1,900, which is currently in the $750 to $800 range. So the PVC prices had more than doubled, and as a result, the profits had improved significantly. But if you look at the past 10 years, the range which we see today, anywhere between 700 and 800 or 750 to $850 per metric ton for PVC, that is what the normal price of PVC is. Our profitability has improved significantly if you see over the past. If you see the normal operating condition, our profitability has improved from a 7.5 rupees per kg to almost 10 to 11 rupees per kg. That is mainly due to a better product mix that we have had, more of agri, non-agri contribution to the overall mix. And going forward, we expect it to be reaching almost 12 rupees per kg range going forward.
Right, and your net free cash is of about 1,500 crores that's lying in the books. How do you plan to utilize it? Have you got any capex plans lined up, any product launches, say even a dividend payout?
So we have been evaluating investment options, and that should be known within the next 6 months or so. And the rest of the money will be returned to the shareholders.
Also looking to monetize a part of your core non-land parcel in Pune, as we understand. So how much are you expecting to garner from the land sale?
So that is, the land sale is work in progress at this point of time. And last land sale, the net realization was about 376 crores. And we expect it to be a little bit higher than that. And the land parcel will be something similar.
Okay, great to have you on the show. Thanks for highlighting your earnings and what the future visibility is like. We'll take a very quick break on that note on the show. That's Finolex Industries and trade to you completely flattened out and it's given up its morning gains. But the Nifty is actually at the high point of the day. We're seeing a good 200-point comeback after what's been last two very tough days for the market. We'll take a break, track the markets on the other side.